Hello and welcome to the Real Estate Dojo Podcast. My name is Tyler Awesome, the founder and CEO of REISift. And in the Real Estate Dojo, which I think we're going to acronym as RED officially, because I realize that it spells red. And also a cool thing about that is red is also what you don't want on your income statement. So there's lots of ways that I can use that name. But welcome to the podcast. We are a podcast that is going to be dedicated to giving quick, actionable advice for real estate entrepreneurs and really business owners who are looking to really refine their marketing, to increase their net profits, and ultimately take more prospects to leads, right? And more leads to revenue. Not leads to contracts, but leads to revenue. So this is going to be the very first episode that you're listening to. So I'm giving a little bit more of a precursor. Today we have Jordan Rabb in the studio, if you will. We're using StreamYard, so it's kind of like a studio. I don't know. But I'm just going to real quick mention kind of a little bit about him. He's 30 years old from Boston, Massachusetts. He did part-time real estate for a little while there, about 8 years. And he went full-time about 5 months after COVID hit. So we're going to get a little bit more information about him. The idea is for these to be about 15 to 30 minutes long. We're going to talk about what he's doing right now in his business, what he's struggling in, and then I'm going to give him some advice to do and execute in the next month. And then in the future, we'll bring him back on and we'll kind of see where he's at that time. So Jordan, man, I appreciate you hopping on and being vulnerable. That's one of the biggest things about this podcast is literally you're telling everybody your business, right? It's a very vulnerable place to be in. So I do appreciate it, man. How you doing today?
I'm good. Thanks for having me on. I know everyone asks you for coaching. I don't know why, you wouldn't be booked out every single 15-minute slot possible just because this is a free coaching, right?
Yeah, basically. I mean, so it's win-win, and probably because I know we're booked out for a while, but I mean, I would lose my mind if I had to do these every 15 minutes. It'd be crazy. But dude, I appreciate it. So, you're 30 years old. You started about 5 months before or after COVID. What were you doing before that in general? Were you doing anything in real estate or?
Part-time. I was just buying off the MLS, I don't think you could really miss after, the recession all the way up to when COVID happened, right? Like, the market was only going up. So I was in the bar business, and then obviously COVID hit. I was doing marketing and promotion for about 10 bars there. And, they all dropped me at once because the first person to go is, the one that's filling bars when bars are at 25% capacity. So sat around for a while there, didn't really know what to do. Said, you know what? I know enough about real estate. Why don't I just hop in full time? Then in around September, I hopped in full time and I realized I knew nothing about real estate. And then I kind of, did what everyone does, right? I pulled a bunch of lists, bought a bunch of data, hired a cold caller, went through all of it, bought more, recycled, repeat. Not recycled. I learned what recycling was because in December, joined REISift, kind of was hesitant, but I heard you on Steve Trang's podcast and I was like, this guy knows what he's talking about. So did the auto lead gen challenge in January. Best decision I ever made. Kind of put my whole business on hold there for 2 months and then jumped pretty much full time back into it about late February, March, really with what you taught me. And that's pretty much where I'm at now.
Awesome. Cool. I really appreciate the backstory. So everyone kind of has a good idea kind of what this flow looks like, from bar industry to real estate. I'm sure both you deal with some really unique individuals. So I guess there's one commonality there. Right now in your business, it looks like you're utilizing REISift. Using the free Podio, which I think is fantastic. I mean, everyone knows my opinion on Podio in general. I'm trying to get everybody over to just using REISift, but you're using free Podio, which I think is totally fine. I just don't think most businesses need to really have full-blown automations inside of their lead management. I think they need to make sure they nurture their leads and give their leads the respect and desire that they want in their bank account. And then you're using Call Magic Leads. We'll talk about in a second. I'm assuming that's a cold calling service. That's the one that you're using. Yep. Using Roar, which I'm assuming is for your RVMs. And right now your monthly spend is about $4K. Is that $4,000 including any sort of distributions and stuff, or is that just marketing related and
That's
tools?
just marketing related.
Okay, marketing related and your software products, like for example, Roar is in that, and so is Call Magic Leads, is like QuickBooks in that, or any other tools you use, or is that just those tools revolving around it?
Yeah, I included. I can list them off real quick if you want.
Yeah, go
My
ahead.
GA, 725. Call Magic, which is 1,800 a month. My website, $10. Been verified, 25. I put my bookkeeper in there, 200. I get a newspaper every week. It's called the Banker and Tradesman here. They kind of list liens and stuff and foreclosures. So that's 30. CallRail, which is about 100, and then Loom, which is 10, plus obviously REISift. And then I guess when it comes to Roar, I just did a one-time $1,000 upload for that, just because it gets it gets you down so many cents per text and ringless voicemail. So it's a little bit average, but also pretty much, we spend 4,000 a month.
Okay, cool. So on that 4,000, or in those tools, you have essentially really what it is all your operations costs, including your marketing. So I mean, that's not bad, right? So the big question though is then how much revenue in the last, let's start from January, like how much revenue projection do you have based off of, we'll say $12,000 is roughly what you've spent since the start of the year, right?
Yeah. I mean, if you asked me that question a couple of weeks ago, I would have had a way different answer, but
yeah, I remember.
I lost a really big deal. You had it under contract. It was a 100K deal, and he ghosted me and filed bankruptcy. So he's out. I had another one under contract. It was a short sale that fell through. Nothing I can do about that. And I did put one under agreement on Friday. I'm going to buy that for 200, put 30 into it. Should go for 315. So there's about 40, 50, 60 grand profit, depending on, closing costs, stuff like that. So all in all, that would be my projection. That's really all I got going on.
Okay.
But if you asked me before, it would have been different.
Right, exactly. But this is important, right? From as a company perspective, whether it was a random off case scenario that happened or whatever, our contract to close ratio is our contract to close ratio. There's an average that's going to be built into our business, and it's important to know that. And if it improves over time, then that's great. But it's really kind of about trying to get, different properties under contract that are more assured to not have these types of problems, right? That are going to do that. It's okay to have one or two or three of these ones that are kind of high risk to close, is what I like to call it. You can't really help somebody who just goes to you and everything else, but we can be predictive that it's going to happen through our averages, right? So right now, our averages aren't doing really good, but really that's because there's something else happening. Generally, it's usually in the front of the marketing side or an expenditure thing. The most important thing is that in this time frame, we're not spending so much money to where if it continues to happen, now we're out 20 or 30 grand or 40 grand and we have nothing to show for it. Right. We need to be quick to fix, right? And figure out what's working and what's not working. So right now we got about 12,000. So we're essentially right now, it sounds like we're at 12,000 in a negative until we close that 50K deal. Get that flip done. Right. So we want to know that, because ultimately what we're trying to really do is we're trying to get the business to pay for the business. Right now, you're paying for the business. Now, I do know in your scenario, you are taking leads and referring them to, you do like lead gen as well, correct? For like on the agent side and stuff. So you have a system where you can still list properties even if you don't buy them.
Yeah. So I have a strategic partnership with 3 realtors, and we kind of split the marketing cost. They get all my listings. And we've been able to convert 3 listings year to date. So, I think they're probably seeing maybe a return, maybe, I don't really know exactly how their business works, but I would think that they're at least breaking even. Plus they're also going to get a portion of the deals that do close on the wholesale side too.
Right. Well, this is big because we start to see the whole business model that we can create, right? And me personally, I love the business model of being able to always be able to, offer a solution no matter what the solution is. if someone wants to sell their house, ultimately the end solution is, if they don't want to sell it to you for cash at a discount, then it's okay. Well, you list it for me. Oh, I don't want to list it for you. Okay, well then now, how about an owner financing? Like it's really about building the solution. But initially, we just need consistency, and then we kind of bake in these other options as we go. So. Okay, cool. So let's look at kind of what else you got going on. So we have the REISift, Podio, Call Magic. As of right now, to produce those 3 listings and to get those contracts, you have about 350 leads since just fourth quarter of last year to now, and you're generating about 2 leads a day. What would you say is your biggest lead gen right now? Is it going to be your Call Magic leads, cold calling service, or is it going to be RVMs?
No, it's Call Magic.
Okay, so it's going to be cold calling. So CC. All right, and let's see here. Quality, lead gen, motivation. So it sounds like maybe your biggest problem is like a lead generation. You're kind of self-diagnosed to you really need more motivated leads, less tire kickers. Deal flow is too low, and you're getting the deals to actually get to the finish line. Like I already said, with the whole getting to the finish line thing, it's really a predictive thing. It's about trying to focus on the data set that's going to have less issues revolving around it. That's why I'm a huge fan of like tax delinquency. I'm not a huge fan of pre-foreclosures. I do like probates, but I like to try and focus on not that as my primary source, right? I want to make sure that I have things that they have a timeline associated with it. So the seller knows that we have to close in a reasonable time or else they lose the property. Because it doesn't matter if you file a bankruptcy or not with tax auction. Like you're going to get money, yes, and you can pay that off. However, you're still postponing it. So there's a lot of different scenarios that we can then learn from that, obviously, to try and make that not happen again. But I'm not a huge fan, as you know, of cold calling services. I think that's really the biggest problem that we have in this mix of what you have going on right now. You're super lean in REISift. You're super lean with Podio Free. You're super lean using Roar because Roar is really cheap. The question is, are we truly using it? It would be the next thing. Like, are we really using it in a system, in a process? Are we recycling the data through it? Are we really focusing on getting the most out of it? Or are we just putting money in it? Because a lot of times that's ultimately what ends up happening is we add in these different tools. And the reason why I mentioned that is because you put on here, you have like cold calling, you're doing go, no going, you're doing deep prospecting, you have one-off mailers, RVMs, door knocking. You got a lot of stuff that you're trying to do. But is it any of them really going from you're really going 1 to 50% maybe on 3 of them? Is any of them really going from 50 to 100%? Besides maybe the cold caller, because the cold caller is you're just throwing them data. Inevitably, that's why you have $12,000 in costs that you've incurred right now, is because of that. So it's kind of like we need to diagnose and say, okay, where is my biggest money drain right now? Because continuing that is not going to help. We need to get rid of whatever our biggest money drain is right now, and we need to refine, and we need to kick something back up that is like a full process. And if you're going to be using them for that, if you're going to be using a service for the cold calling, we need to be able to track the results. That way we can truly focus on what they're not reaching and give them the data that we need them to call. The downfall to giving them any of the true data that's like worthwhile is like, well, to be honest, they're going to burn through it. They're not going to treat it like it truly needs to be treated, right? If we have like code violations and tax delinquencies, vacant properties, and we give it to them, they're going to just churn right through it. We're not going to get all those phone numbers, contact. We're not going to know who we're not contacting unless we're properly doing it on the back end. And so if you're going to keep Call Magic, what I would recommend doing is I would go ahead and I would give them like just a crap ton of high equity data, right? Your burner cold calling services or just your massive cold calling in general should be focused on getting through bulk data and producing I think I'm ready to sell type leads. They're not going to solve your problem for tire kickers.
Right.
Right. That's not going to solve your problem.
So I have been giving them, what I've been doing is I've been using like kind kind of a 2 cent, 3 cent Fiverr skip tracer for high equity, but for the free and clear unknown equity and the stacked and the vacant, I'm pulling from more cities around Massachusetts and trying to feed them. They go through 20,000 a month. So what I do is I feed them that. I guess what you're saying is I should even include high equity in that too.
I would only give them high equity. I would say if you have a bunch of high equity data, and I just happen to know that you get your data directly from the county, so you don't have to buy a bunch of it, right? And since you're skip tracing it anyway, you have the unique advantage that you're also generating listings, right? You have the ability to give listings. So I would literally upload all of your data. It doesn't really matter if it has equity or not, right? Maybe you focus on the last 2 years or purchase in the last 5 years or older, right? Period. Doesn't matter if it has 10%, 20%, as long as it has enough equity in it to cover agent fees, which is upwards of probably like 9% in Massachusetts, I'm guessing, between agents and closing and everything. They need at least probably 10% equity to be able to close without having to bring money to the table. Go ahead and give that all to them. Use this service as a service to figure out if someone wants to sell their property. If they want to sell, now as a lead management perspective, now we're going to, figure out, okay, what is it that I can offer this person? Is it going to be the listing? If they want to sell, can I give them a cash offer? Can I give them a listing with a guaranteed cash offer as backup? Like, what does that look like, right? Create a program inside of your company where it's a cookie cutter, right? For those high equity leads. They don't typically have problems, right? It's just they got a property with high equity. Maybe there's something else going on, but a lot of times those high equity leads are opportunistic sales, right? Like, hey, I need to sell my house because, well, I just don't feel like dealing with it no more. I want to do a rental. It's not like they're usually in, tax delinquency and stuff like that, unless you just, don't have that list or whatever, because you're using REISift in this example.
Right.
Then your code enforcements and tax delinquencies and all that, you guys need to bring that in-house. Like you can't give that to them. You can't be giving them 20,000 and mixing those in, because you're just losing way too much possibility.
Yeah, we have 3 people dedicated to jumping those. I guess they've been doing a lot of pre-foreclosure though, and I guess it's interesting you mentioned that because when I think of pre-foreclosure, I think those are tax delinquent people that are just heading to foreclosure through their own problems. So if you're tax delinquent, you're also probably likely behind on all types of payments, I would think. But unless you're telling me that that's not the way I should be looking at it.
Yeah, I wouldn't look at it that way, because it's not necessarily true, because they could have no mortgage and be tax delinquent, right? There's a lot of other scenarios where it's all about the reason why I don't like tax delinquencies, because a lot of people don't have the knowledge or experience to really fully deal with it. Like, if your agents can deal short sales and they can do all that kind of stuff and they're seasoned in that, then I think it's fine. I just don't think you should count on that money right now. We need money right now, right? Because anytime you have an attorney involved and, list pendants and all that other kind of stuff, it makes it really difficult. But with taxes, like a tax is technically a foreclosure once it goes to tax auction. The difference is that with taxes, there is no attorney involved. And so there's no barrier between me and the seller. With pre-foreclosure, it's a little bit different. In foreclosure, it's a little different, because if the seller is foreclosed, in order to get information from the bank now, sometimes I got to go through an attorney. I got to message the attorney. They got to get me details. I got to get a letter from the seller to give me that information. It's all, there's barriers there. With tax delinquency, I call the county and it's open data. So I don't got to worry about it. I can learn that process and I can become really good at that process. So I just really believe that we should focus on one core data set. If you want it to be foreclosure, great. The problem is that we're in the middle of where foreclosures are sticky, but tax auctions are still happening, so
we have something in Mass. I don't know if you have it in Florida. It's called tax title. And that's when the city will actually put a lien on the property. So usually those are publicly available. The tax delinquent are a little harder to get.
Yeah. So I think it's just about understanding, like, pulling back and just really narrowing in on one of these things, because we got to get consistency, and we can't get consistency when we're trying to manage everything, because I guarantee there's a lot of holes in here. that we're not seeing because we're looking at the 2 leads a day, which inevitably 2 leads a day just isn't enough, right? When it comes to that type of data, because 2 leads a day at an average of on cold calling a 75-to-1 ratio, you're going to end up it's going to take you 3 or 4 months to even get someone who's willing to say, I'm ready to sell right now. And then on top of that, if your lead management process is broken, all the other 50 to 60 people that didn't say that I want to sell right now, if you're not properly following up with them in a really nice way for the next 90 days, 6 months, then those guys aren't going to convert. When you're doing cold calling where you're relying on the 2 to 4 leads a day, it's really like you don't see the compound result until after 90 days to 6 months, because then you start having the previous leads converting that didn't convert right away, and you start kind of building up this stack of individuals. But what we would rather do is fill our pipeline full of people that have true problems, because those conversions are going to happen more. And then our lead manager understands those problems and they're working towards getting them to actually want to solve them themselves. Right. So that's why we need things that have time associated with it, because it makes that person need to have it happen sooner rather than the opportunistic. Well, I can just sit on it. Well, not really, because if you sit on it, you're going to lose it, so you have one or the other. So that's why foreclosure is okay if you know how to properly solve it and you're okay with waiting to get the money. Because at worst case scenario, the nice thing about foreclosure leads is if there's no equity, there's always a short sale option. Right. But we need an agent. We need the process. We need to understand that. We know that it takes 6 to 8 months, if not a year, to get that short sale completed. It's got to it's got to be listed. It's got to be bidded on with other people, because it's got to be fair offers. It's a lot longer of a process. So I think we need to choose a data set and we need to choose a tactic, and we just really need to narrow in on that. And I think we need to be careful on the amount of people that we're dealing with here. Okay. I think if you have 3 individuals, right, we need to move that data through those 3 people. Each person needs to be responsible for a process. First person's responsible for the initial contact. Second person's responsible for trying to reach out to the siblings if we can't reach the initial contact. The third one is responsible then for either follow-up, or if the second person gathers all the information, their information gatherer, the third person is then reaching out to the actual individuals. So it's really, you can use those 3 people in a lot of different ways, either in the conveyor belt methodology where you each own a process, or you really document the true process that's happening, and all 3 of them own a different data set. One of them owns code enforcement, tax delinquency. The other person owns foreclosures and vacant. The other person owns divorce and foreclosure. Whatever. They own a small data set, because then you can hit these different data sets you want, but you're not sacrificing revenue and just spending a bunch of money, right, for no reason. So because you have the agents and the listings, I think that you can continue to use the cold calling service if you're really putting them where they should be focusing on. Okay. Right. And that's focusing on, let's kick up leads, period. Right. Mm-hmm. I don't care about if they're motivated or not motivated. I just need people that say they want to sell their house, because really what you're building is a longevity, because you're working with an agency here. All right. And then on your personal side, on the flipping and the investor side, we want to peel back the onion a little bit more. We want to create that flow. We don't care about that other stuff as much. If your partners and the other stuff, are like, well, it's a lot of money to be spending every single month for the lead gen on the listings, then we need to just nix the service, and we just need to take one of these 3 individuals that are doing the other stuff internally, and one of those now need to start calling high equity, and then one of the other ones strictly only focus on your niche data, and then the second person you can either split between one of the 2. There's a lot of different options we can do here. Really, I think the biggest thing though is if it was me, it would be nixing out the service, having someone in-house do cold calling for me, and then I would add, instead of doing RVMs, I would add direct mail into the mix, and at not just a one-off type thing. Or I would move through the data faster on the niche data, and if I don't reach them after one attempt, I would send the postcard, and I would build up a pipeline of postcards. Okay. So to summarize that, right now you've spent about 12,000. You know, you had some unfortunate situations happen where some of these deals fell through. Some of the sellers kind of screwed you, to be honest. And now you're at the point where you're still spending 4K a month, right? And you've kicked up opportunity. We have one that could close here, but we just don't know yet because we don't actually have a metric to go off of, right? We don't have a deal to close metric, right? We're trying to create that. So we want to figure out what's spending the most money on it. And I guarantee that most of that 4K is going towards the cold callers, right?
Yeah.
So by eliminating them and then taking responsibility for a smaller data set and really trying to get a hold of those people, then we're going to end up getting to where maybe we're only spending $2,000 a month. So now we've extended our revenue, our profits that we're spending money out on by triple or quadruple the time, right? Double the time, rather. And so now we have more bandwidth, and now we just focus really on one problem, right? Let's forget about everything else. If that one problem is tax delinquency, then fine. If it's foreclosures, that's fine. Just know that you're going to probably have a lot more issues that arise with foreclosures, right? Okay. So, to reemphasize, there's anything there that I didn't have accurate when it comes to your team. Those 3 people are those are in-house, right? They're not the same as the calling agency.
No, the 3 people are in-house. They're commission based.
Okay, perfect. So then we can utilize them.
Yep.
We might even, depending on who they are, maybe they nix down to 1 and then you still keep the cold callers, cold calling all of those. You're going to have to, because you're not the sole decision maker here only, I'm assuming, since other people are spending money on this budget, you're going to have to really kind of throw it on the whiteboard, right? And build the plan out based off of whatever the size of their listings were, however much they bring in from the listings, figure out really, are they profitable? Maybe have a conversation with those callers and turn them out into, say, hey, change your script up a little bit. Make sure that we're tracking the results of those calls, uploading those phone tags, and making sure we're cycling those properly. Because we can lose a lot of money and a lot of opportunity off of 20,000, records a month.
Right.
And then refine back, cut that budget down as much as we can, and focus in as much as possible on at least one data set, and just really become good at it. That could mean that you pull that weekly and you send direct mail to them right off the bat, right? What I'd love to do, though, is initially start off, for my advice in the next month, right, for you to execute on the next month is make the decision on if you're nixing them or keeping them based on the fact of, is the listings worth it? Because the 2 leads a day is realistically not.
Right.
Because we can generate that through the 3 people we have part-time easily. Okay. So we got to make that decision.
I would say I'd probably like to stick it out for 1 to 2 more months. And then, the first thing is I got to have a conversation and see, are they profitable? Then stick it out 1 to 2 more months. And if I have to, nix them and kind of focus in, maybe make one of those guys a cold caller, make one of them, whatever, a researcher, and one just a deep prospect or something like that.
Yeah, because it's really going to depend on how much, like depending on how much money you had come in, right? And from those listings and everything else, like you could be okay with like another, let's say it's another $4,000, $2,000 a month that you're spending for them, right? It's like, hey, for $1,000, I'm willing to spend another $4,000 to hopefully kick up another 50 leads. Because if I do and I get a deal and it's a 50K deal, then my numbers are still fine. I'm still profitable from them. Right. We just don't have a number there, and it's hard when we don't have a number because we truly don't know what your deal to contract cost is yet, right? And that's another thing actually that you need to really figure out that number. Like for those contracts you did get, how much money did you spend before you got the contract? So we're missing some metrics here to really, really fully be able to diagnose. But at its whole, I can see that there's a lead. There's some issues probably with the ability of execution on the lead generation and actually like getting the contract, right? So we need to refine that. I would say if you're good with 2 months, fantastic. If you're thinking that after the 2 months, that was another $2,000 and you haven't recouped it yet, we're going on 6 months, right? So if we're going on 6 months and nothing's happened yet, there's either an issue on their end or there's an issue on our end that we really need to figure out. But we don't want to wait until 2 months to figure out that issue. We want to diagnose, figure out if it's us. That way they can do the best that they can for the next 2 months. Cool.
Okay.
Awesome. Are you tracking? You're getting a report, right, from the callers on how many answers and everything they got?
Yeah.
Okay. Do you have that in a dashboard or in a Google Sheet that presents it into that dashboard at all?
I should have it in the form of an email daily. I don't know if I actually don't think I've gone in. I used to get them every day, and now I haven't gotten them in like a couple weeks. I forgot about that.
So let's make sure we have that. And let's make sure if you're receiving an email, either yourself or an assistant needs to populate that email into a Google Sheet. I'll go ahead and in the show notes of this episode, I'll include a cold calling template, and I'll send it to you on being able to actually track cold callers daily so that you can input those results and see. Because ultimately, the only way that we can tell if something is wrong is by visualizing it. And we want to know if something's wrong or something drastically has changed between 1 week to another week so that we can make sure we adjust. Because just like Friday is the worst day to try to start working because it's too late because the weekend is coming near, we need to be able to see when our money is not being effective. So I'll send that to you. Everybody else, it'll be in the show notes. Jordan, man, I hope you've heard me say this before. Obviously, my opinions on the cold calling service and stuff, but we've never actually fully kind of diagnosed, the other stuff that you have going on in the business. Everything else is super lean. That's really your only overhead. So that's what's good about it is if you did get rid of them, you'd be really lean. So we just need to make sure they're getting the best result, and we need to be listening to their phone calls to refine them, if anything, right? They could be totally just messing up our calls. Right. So let's make them profitable, and from there we'll focus on what's next. Cool.
Thank you. I appreciate your time, man. I know you're a busy guy, so this was super helpful.
Yeah, of course, man. Let me know what you end up deciding officially after you figure out if it's profitable, though. I'd like to know that. And then we'll talk again here real soon. Okay.
Cool. Thank you.
Awesome. Yep.